Welcome to Morningstar, HSBC's quarterly earnings beat forecast, giving the market cost for share as also its first quarterly dividend announced since 2019. The future is still murky, though, on whether the bank will be split in two as some shareholders requested. Thus, we're asking our senior equity analyst, Michael Medad, to tell us what is going on with HSBC. Hi, Michael. First, HSBC resumed paying dividend. Do you think the expectations of a regular dividend payout is finally normalized?
Yes. The short answer is yes, definitely. I think so. With the resumption of the first quarter dividend as a quarterly dividend, I think it's normalized. The regular dividend payments are very important to a lot of the shareholder base. HSBC has a lot of individual retail shareholders in Hong Kong that use the dividend stream, for their investment or income. And until 2019, HSBC had a very regular pattern of paying 10 cents a share, basically every quarter, first, second, and third quarter of every year. And then at the year end, a final, somewhat larger dividend based upon the earnings. And then so from 2020, when the pandemic came, they suspended their quarterly dividends. In 2020, they paid a small year-end dividend. And then in 2021 and 2022, they did pay interim dividends halfway through the year, but no quarterly dividends. And the full year amounts were smaller. What we now have is that they announced that for the first quarter of 2023, they're going to pay 10 cents a share. And I think we're going to get back to the previous pattern. Previously, for several years before the pandemic, they had paid for the full year, often 51 cents a share, based upon their policy of core payout ratio of earnings of 50%, potentially with some special dividends on top of that, depending on, if there's capital levels allow. But just based on the core payout ratio, I think we're going to actually end up with a larger dividend starting this year than we had for the full year than we had pre-pandemic. And also, for the first, second, and third quarters of every year, we should have the regular 10-cent payouts.
So other than dividend, we see pressure coming also from some shareholders requesting to split the bank. Does this better than expected results help fend off such proposals?
Again, the short answer, I think, is yes. And maybe not fend. I wouldn't characterize it as fend off the proposals as so much, into get the HSBC has its annual general shareholders meeting tomorrow, Friday, and it's up to the shareholders to vote on the proposals, particularly ones from Chinese insurer Ping An, one of which is about this looking at how to increase value, for example, through breakups. And for this, the management has been adamant that they think their current strategy is the best one for realizing the most value, and that a radical restructuring or breakup could be very disruptive or difficult. And I think that the better than expected first quarter earnings, but also even the previous quarter, we started to see HSBC is benefiting to some degree from just higher interest rates and some market effects, but I think on an underlying basis as well, they had several years where ROTE, the return on tangible equity, was somewhat disappointing, and I think with the benefit of the higher interest rates, but then also it appears that underlying earnings are improving and they can deliver better ROTE. And I think this does help them argue that the current strategy is the best for shareholders and not to pursue alternative strategies that could be disruptive.
Lastly, with banks in general, investors still have many concerns after seeing what is happening in the US and Europe's banking system. How would this affect HSBC?
It depends obviously on what happens. I think, just overnight, as I'm looking today, on Thursday, there was another U.S. regional bank, not failing like Silicon Valley Bank, but and not being sold like First Republic, but still the shares falling very rapidly, and it suggests that there's a number of U.S. regional banks that still are going to have issues. How does this affect Asian banks? In general, for most banks in Asia, I think that even if it turns out to be a somewhat financial crisis type situation, which is yet to be seen, but even in that situation, I think the Asian banks, the situation is different enough that there's not a lot of effects across the region. But within the Asian region, HSBC is the most global bank. So within Asia, I think, it is a bank where we have to watch, to what degree its future earnings could be affected, higher credit cost if there's recession. So I think, yes, it's something to watch for, and within Asia, it's maybe one of the more, the banks that could be more affected, but generally the Asian region is probably the least affected region in the world as we're looking to see what happens here.
Thank you so much, Michael. For Morningstar, I'm Caitlin.